All right, let's talk about one of the most recognizable brands on the entire planet, Nike. The stock has had a seriously tough run lately, and it's got everyone asking the same question. Is the swoosh losing its magic, or is this a champion getting ready for a major comeback? Let's dive into the bull case and see what we find.
Okay, before we get into the weeds, you know the drill. This is all for educational purposes. It is not financial advice. You've got to do your own homework and make your own decisions before you ever think about investing. All right? Let's get to it.
So this is really the core question we're wrestling with today. Is Nike fundamentally a broken brand that's, lost its cool? Or are we just looking at a world-class champion that's going through a really tough but temporary slump? Honestly, the answer to that question is the entire investment thesis, right there.
And just to see how stark the situation is, look at these numbers. It's like a tale of two different companies. Back in fiscal 2024, Nike was flying high, over $51 billion in revenue. Fast forward to 2025, and that drops to $46 billion. But the real story? Look at the net income. It basically got chopped in half. That is what has investors spooked and what's been hammering the stock price.
Okay, so what on earth happened here? Well, this wasn't some mystery. It was a handful of clear, operational stumbles that just kind of piled on top of each other. So let's play doctor and run through the diagnosis.
It really boils down to four major headwinds. First, their big push to sell directly to you and me online kind of backfired when all that pandemic-fueled digital demand cooled off. That led directly to problem number two. They were stuffed to the gills with inventory, forcing them into heavy discounts, which is never good for a premium brand. Third, China, a huge market for them, has just been a persistent drag. And finally, you've got rising tariffs, especially from Vietnam, where they make a ton of their stuff, just eating into their profits.
And if you want to see the real-world impact of that, look no further than this number. In the second quarter of fiscal 2026, their gross margin dropped by 300 basis points. That's a full 3 percentage points, and management pointed the finger squarely at higher tariffs. This isn't just some number on a spreadsheet. That's a direct shot to their profitability.
Now, this quote you see here, this is absolutely key. It signals a huge pivot. Management is basically telling Wall Street, yep, we know we have a problem, and we are willing to take our medicine now to accept some short-term pain to get the brand healthy for the long run. That's a big deal.
And that promise to take their medicine brings us to their game plan. They're calling this a reset year. And this isn't just talk. It's a real, active strategy to go after those core problems we just laid out.
You can see that strategy playing out right here in the numbers for Q2 2026. Look at that. Wholesale, the partners they had been moving away from, is up 8%. At the same time, their own direct and digital sales are down. What's happening? They're using those wholesale partners like a pressure relief valves to get rid of all that excess inventory. And you know what? Some of this pain is actually self-inflicted, but in a good way. They are deliberately pulling back on some of those classic shoe lines, the ones you see everywhere, often on sale. Yeah, it hurts sales in the short term, but the idea is to clear the shelves and make room for new, fresh, exciting products that can bring back that brand heat.
All right, so that's the business story, the problems and the turnaround plan. But what about the stock itself? What is the price action telling us? Let's pull up the charts and look at the tail of the tape. Let's start by zooming way out to the monthly chart. You can see it has been a rough ride down from those 2021 highs. But, and this is a really big but, we are getting very close to a major long-term support area. Think of this as a historical battleground where buyers have tended to show up in force. We're looking at that zone around $50 and then down in the low 40s. These are the key levels where a real fight is likely to happen.
Now, if we zoom in to the weekly chart, you can see the more immediate challenge. The stock is stuck in this downward channel, and it's bumping its head up against resistance, that's the ceiling for the stock, right around that $66 mark. This suggests that the path of least resistance for now might be a continued drift lower down towards that big support zone we just saw on the monthly chart.
So when you put these two charts side by side, the story becomes pretty clear, right? You've got this short-term downward pressure from the weekly chart pushing the stock lower, but it's heading directly towards that long-term floor from the monthly chart, where a big battle between buyers and sellers is set to take place. The big multi-billion-dollar question is, will that floor hold?
So what's the bottom line from all this chart gazing? Well, it's pretty clear. Nike is absolutely not a momentum stock right now. You don't chase this. Instead, it's what you'd call a base-building candidate. The idea is to watch and see if the stock can stop falling and build a solid foundation, a base, around these major support levels. Patience is the name of the game here.
Okay,
So we've got the business problems, we've got the turnaround plan, and we see what the charts are telling us. So let's put it all together. What is the actual bull case for an investor looking at Nike right now? Well, it's all about a recovery story. It's a bet on a return to normal.
So if you're a bull, here's your checklist for 2026. These are the 4 green flags you're looking for. 1. Cleaner inventory. That means less stuff on the clearance rack. 2. Gross margins need to stabilize. The bleeding just has to stop. 3. That direct-to-consumer channel needs to find a floor. And 4. You want to see proof that they're managing those tariff costs effectively.
Of course, we have to be realistic. This is not a sure thing. So what could blow up this whole bull case? Well, if China stays weak, that's a huge problem. If tariffs get even worse, that could crush their margins. If all those heavy discounts become the new normal, that's bad. And of course, if competitors keep chipping away at their market share. These are the big risks you gotta watch.
So at the end of the day, what's the bottom line? The bull case for Nike isn't some crazy bet on a miracle. It's actually much simpler than that. It's a bet that a world-class, high-quality, iconic brand can simply get back to doing the basics right and return to normal execution.
Hey, if you got something out of this deep dive, do us a huge favor and hit that like button and subscribe to the channel. It really does help us out a ton. Thanks for watching.